We'd like to thank InvestaQuant for helping us with the meeting software. And by the way, InvestaQuant is the local company that is really good with some futures trading systems. So for those of you who are looking for something like that, particularly breakout system, range breakout systems, things like that, they are an outstanding company. And we've got 2 hours ahead of us tonight. And then after that, we'll get together at Cameron Bar and Grill. David's organized to get together at 9 o'clock at Cameron Bar and Grill. First hour tonight, starting now, we're pleased to have Michael Rulison give a talk on a deep dive into ThinkOrSwim. And then in the second hour, we have a panel discussion on some recent developments in trading for the year. How do we look at their effect on the coming year? Obviously, there have been some gyrations in the market. How are these going to affect trading this year? And what implications do they have? How was last year? Was volatility too low last year? Is it going to be too high this year? Or is it going to be just right? What are the implications of some strategies? And what are some broader perspectives also on trading that we should bear in mind as we take a measure of the year? For now, let's have a warm welcome for Michael.
Thank you, folks. This presentation comes in 2 parts. The first one has 8 slides and is full of text. And the second one is full of slides, 39 of them, and it's pictures with very little text. So beginning here, we'll move ahead to the next slide. And we're talking about the big picture. And from my point of view, we are awash in data. And we're trying to work our way out of that. And I've just lost my place, so I need to look at his screen. That's fine. Okay. You can read faster than I can talk, and I'll assume that you've already been through this slide, so we'll move ahead 1 slide.
We're not updated.
They're not synced.
Yeah.
You aren't showing the slides up on the...
Okay. So this gentleman's driving the thing, and I am not, so we just have to see what happens there.
Somebody's displaying the slide.
You some sort of presenter mode, Matt?
No, I've never seen this before. I use this software all the time.
Well,
it's just on this. It's showing the right one for the go-to meetings, so that makes...
Well, I'll just do a little talking while we work with the video. In ThinkOrSwim, or TOS as it's sometimes known, you can usually skin the cat in more than one way. As a matter of fact, there are probably too many ways in some cases for most of us. And I'd like you to remember also that the left click does not equal the right click. There are interesting things from either one of them in a particular circumstance. In most displays, the settings are adjustable. You can change font size, you can change all sorts of things. It works in fixed and mobile platforms. I use it mostly in a fixed laptop platform. It's a trading platform offered by TD Ameritrade with a link there. and TD stands for Toronto Dominion Bank, which you would learn sooner or later, but I think I might as well share it with you now. The items below will give you an idea of where I'm going tonight. There are components to monitor positions and the account history. There are trading components to look at stocks, to options. There are order types, and order contingency types, and it gets complex. There are more components. Some of them deal with analyzing in charts and looking at probabilities. The charts have lots of options for creating, using studies and using drawings and creating your own or tailoring the studies and drawings that you see into something else. We'll get to a picture of that later and you'll see there's more than you need to pray over. Thank you. There are functions for scanning and filtering. The manual is excruciatingly detailed. I learned some new things doing this presentation. Okay, I will leave you to read the rest of that slide, pointing out that you can have a trial account with paper trading, and I think I'll go get another pointer if I can. But if you fund one, well, and you can do paper trading with your trial account, but with your funded, you can make trades in real dollars, as you undoubtedly know. And we appreciate access to the manual. Most images shown have come from that manual, and maybe we'll get some time for discussions later. Okay, so now we are into the buzzing screen, as I call it. This is one of the first images from the manual. And up at the top, you will see a pointer or a call out to pages, a left sidebar, a main window, and in the pages you have monitor, and this is hard to read. You have monitor and trade and analyze and some other things. We'll come back to that more in a moment. This is an example of a chart. Candlestick chart with reds for down days, green for up days, a couple of long-term averages, which this chart was above at the time it was made, and another item which I forget what it is.
That's that presentation.
Did we lose something?
That's the end of the first presentation.
Okay, thank you. Let's move to the second presentation. All right. This is also called the big picture, but we'll move on from the disclaimer to the sign-on screen. It's okay, go ahead. Having a little video issue here. Okay, sign on screen, fairly straightforward. You have some things that you can do. The white buttons turn green if you wanted to remember who you are and the degree of privacy you want, et cetera, But this screen is also where you set up some of the basic choices. There's a setting menu icon at the top up there. And that's where you get to choose font sizes and white screens and black screens and stuff like that. So moving from there, this is the picture of the whole screen. Can we expand that with this mouse scroll button, for example? No, you need a control mouse on my machine at least. There we go. Okay. Fine, right? No, it's fine. That's fine. Monitor, trade, analyze, scan, market watch, charts, tools, and help. Those are the big pages that you can choose from. We're in monitor at the moment, and it has some sub-pages. We're in the activity and positions portion. To the right of that is an account statement, and to the right of that are futures, activity, and some other stuff that we won't even get into tonight. Up at the upper right-hand corner, up here, we got the usual make it bigger, kill it, and whatnot. You've got a general setup screen. You've got a place to get messages and send messages. You've got a support and chat screen. We come back to that later on. Let's go down to the next. Well, yeah, okay. We're moving from the monitor screen to the account screen, and we can see what the status of this account is very quickly. Next, please. All right. Here's more detail on the account statement. You'll notice that it's highlighted this way here. There's all sorts of different peak parts to it. You've got an equity part here, an options part there, a profits and loss section down here, and an overall financial statement down in this area. Next slide, please. Okay. If you have a display that shows the quantity, the days, the market value, the market price, the market change, and the percent change, and you like that, you don't have to do anything with this. If you want to add a column, like the account code or name or something else, you click on one of those things, you click on add items, it moves it over to this part. You ratify it down here, and you get a new display. Next slide. Okay, here is moving over to the market watch part of the big screen, the buzzing screen, and we got a calendar of all sorts of events, and all of these have been checked, but you could uncheck or check whatever you want to have show up over here. And this is the days of the week going across here. Next slide. Okay, now you've decided that you want to create an order with a stock. So here's some stock which they've blurred out on us a little bit, and they've blurred it out down here, but it doesn't matter what one it is. It has a last price, a net change, a bid price, and an ask price, and we can go in and say, well, we want to buy this, so we're going to have to pay the asking price or something close to it unless we want to set up a fancier order. So just clicking here will begin to create an order, and this says buy 100 shares. You can change that, that's a default. And it says you're going to do it as a limit order. If you like all of that, you confirm and send, and off it goes. Next. So here we are with a stock order that they put into the manual, and it's a three-legged stock order. They want to buy under these conditions, and they want to sell under these other conditions, a limit and a stop order, both good till canceled. The limit order is placed for the day, so forth. Are there questions at this point?
Is there a trigger set up, like on this setup here? Is there any way to tell? Like, so for instance, the order is placed and then the others are placed.
Yes, there are ways to do that. Let's take that up in a minute.
Question, please?
It's down at
It's
the
down there, first triggers.
first trigger is OCO at the bottom. Can you repeat the question on the microphone?
Okay. The question was, for the benefit of the microphone, is there a trigger for these multi-leg orders? And the answer is yes, it's been set up somewhere down here, and OCO stands for one cancels other. There are several types of triggers, and we'll show that shortly. That answer the question?
Yes.
Okay, next slide.
Well, did you want to cover the blocking the order so it wouldn't be a market order, or that later?
Well, okay. All these orders are not market orders in some way or other, and this is something that you can fuss with anytime you see a little arrow in the corner, a little arrowhead in the corner, it means you've got options.
Yeah, in the prior slide before you launched, it was unlocked.
Okay.
That was, there you go.
Okay, there's the unlocked limit order, but if we didn't want limit, we could change it to market.
Right.
Okay, by the way, all these slides are dead. All we can do is see what we see. We can't muck with them right now. Okay, next slide, please. Okay, so having decided we like this setup with 1, 2, 3 different legs, here they are, buy at 153 limit to open, and the other two are one cancels order to close, so that if one of them, if we buy and then one of the red ones is actuated, the other one will be killed automatically. And here are some of the financials that attached to this particular order. There's the account we're using. We could change that account and send it to some other account if we had more than one. And if we don't like the setup, we go here and edit. And then if we do like this setup, we send it and it becomes a set of orders in the state nature of things. Next, please. Okay, so here we get to the more complex possibilities. Contingent orders. And it's marked for buy, a custom sort of thing. It says with an OCO bracket, with a stop limit. So there are things that you can do. This appears to be an order for GLD, so we can copy the whole thing and we can put GLD on a watch list, which we'll deal with shortly. We can write notes about it to ourselves. There's lots of things we can do. Up here, we've got all these subcategories, subpages under Market Watch, including the possibility of setting up alerts. Alerts can be set up on equities, ETFs, and stocks. Alerts can be set up on options, singly or as spreads or some other configuration, so that we set an alert based on the net price of some option trade that has been created or we expect to create. Next, please. Okay, more on contingent orders. What do you want to do? You want to send a single order? Do you want to send them all out? The first set triggers a sequence of things, and so forth. Next slide. All right, let's see. Okay. So types of orders. Market executes at the current price, whatever it is, and they execute within seconds typically. Limit orders sit and wait until it meets your criteria or almost meets them. Stop, stop limit, trailing stop limit, market
On close.
Market on close, thank you. And the last one is LOC.
I think that's limit on close, but I've never used it.
Limit on close, okay. There are more things than we can believe here, and you have to, this is like a very fancy Leica camera. You can use it with all these fancy things, or you can say, hey, I do these things and only these 2 or 3 things at each stage, and I'm going to keep it simple, stupid. Next, please. Okay, now moving on to orders, we can look at the options, and we've got a bunch of options trades by date, by days until it expires. And at the moment, this is open for 22-day weeklies on the 30th of September in 2016. The little green thing means we've got some sort of position in this, and over here we can see we've got a position in the 157 apparently. And I guess it's just one leg, because if it was two, we'd probably see a red and a green up here for both a buy and sell. But anyway, having got this open to this point, we can show, in this case, 8 strikes, but we could show all the strikes from 0 to infinity, or however many this particular equity or option has available to it. And we can tailor the screen here to show things that we think are important. We can change the system from looking at a single option, single strike, to a spread or a condor or one of these other things. We can choose the layout that we want to have. Here, the layout is pushing delta and implied volatility, but we can have other layouts that are canned layouts that we can choose from, and we can create our own. Next. Okay. Now, more options here, and down here there's a little double, there's an arrowhead with a bar, and in that area, orders that we have saved can be put and brought back up. You can copy them, make them active, make a duplicate order of something that exists. Then with the duplicate order, you can change it and tailor it and send it to a different account, and on and on and on. And on the left-hand side, we've got the first real view of gadgets. And the top gadget with black and with red and green is a watch list. It may be a canned watch list that they gave us from their public list of watch lists, or it may be a private one that we created for our own benefit. You can create a watch list for your portfolio. You just say portfolio, and it will look for whatever you are trading at the moment or own at the moment. Okay, any questions at this point? Onward, please. Okay, so you get really deep into options and you want to know what's going on today in the world of options with respect to this particular option, XYZ. And it says, well, the number of calls, the volume of calls, the volume of puts, the sizzle indexes, the highs and lows over different periods of time, the implied volatility, whatever it is that you think is important in your system for trading. Next, please. Okay, so now you want to know what's really going on with what I have created. And you have a blue line which represents what this option trade configuration will result in at expiration date. And then you see in the pink or purple line the status as of today. And if you say, well, I'd like to know what it is a week from now or 2 weeks from now, you can go play with this thing and play with that thing, and you can say, I want a new line every 3 days, every 7 days, whatever it is. And then you can get multiple lines going across here, getting closer and closer as they move towards expiration. This doesn't look like a very winning trade at the moment. But while we're here, I'll just point out that this lighter gray area represents the standard deviation, which is centered on whatever today's price at this moment is, which is right there. Down here, you will see price slices. You can have as many of those as you can keep track of. This seems to be set for plus and minus 6%, which is off the screen under the scales that we've got here.
Can you explain the X and Y axis?
Excuse me?
Can you explain the X and Y axis?
Yes. X is the date, is the strike price. Okay. And Y is the value of the trade. Are you doing that?
Yeah, I'm trying to
You-
mimic you.
Okay. Fine. Just so I know where the shadow came from.
Do you want to use the mouse to do it? You want to use the mouse and do it?
No, that's fine. The price slices always by default come up with a center point, which is the momentary price right now, and it is unlocked, so it'll keep changing as the day progresses. And then above it and below it are things that might be locked or they might be variable depending on how you want things set up. And as you go across here, you can see the delta of the trade that you've got set up, the gamma, the theta, the vega, and the profit and loss for the day, and the open profit and loss, which might be more if the trade's been on for several days. And the buying power effect over here is, as I understand it, the amount of margin that you've allocated, the amount of your capital that they're going to hold in case you get in trouble. Any questions at this point? Onward, please. Okay, you can get some pretty graphs. The expiration here, nice tent, and then you have the current status, which is just barely profitable at this price, maybe not profitable at all. The little vertical lines indicate where the line goes below zero. So here's the blue line going below zero, so you're losing out for the future there. But the purple line has already gone below zero over in that area. So you can carry that area down to this price here and say, okay, that's where I begin to get in trouble. Or that's where I begin to be profitable, or whatever the graph happens to show you. You can change the scale over here, you can change the scale over there, you can move the whole thing up or down to see the part that you want most. If you change this scale, you magnify or minify whatever it is you're able to see here. Next slide.
We got a question coming in. How do you create additional purple lines?
Additional purple lines, we would go back to that other slide that I showed a moment ago. Let's go back. All right, up here it says 1 plus expiration. There's a whole set of things that pull down there that allow you to choose additional lines. And in this right box, you can put the separation in days between the lines and so forth.
Okay.
Okay, next slide, next slide. Okay, just over here, where have we gone? I think we must be over there.
Earnings?
Is that where we are?
Yeah.
All right, earnings. So here's a whole bunch of graphs about earnings for, in this case, Apple, and a time trend over a period, I guess, of quarters, graphs of all sorts. I've never been there, but it may be your cup of tea. But it's an example of some of the analysis that's available to you. The platform is incredibly rich. Next. Okay. Basic graph, candlesticks, red for down, green for up. Here we go, zippity, zippity, zippity through time. We can go up here and say, okay, where's my day thing?
Right here.
That's my day thing, I guess. Okay, we can show it by day, by week, by 15 minutes, by 1 minute, by 1 hour, 4 hours. There's all sorts of things you can do. I'll show you another example of that, I think, shortly. But if we're not satisfied with a simple graph that's easy to read and so forth, we can go and we can do our own drawings on this, or we can capture a canned drawing of some sort. We'll get into that in a minute. Likewise, there are things called studies where we can choose to show something more elaborate like Bollinger Bands, and we can set Bollinger Bands that are wider going down and narrower if we go up, or whatever. We can set them so they're equal. We can set them for different lengths of time, just to keep talking about Bollinger Bands. But what I'm saying applies to any study that we might want to do. MACDs, relative strength indicators, and on and on and on and on. Next slide. Okay, we're getting a little more complex. We put in a simple moving average. I have no idea what the value of it is because it's probably indicated
21.
up here. 21?
Mm-hmm.
Okay. So this guy like 21 days, all right. But we could have 3 of these, 21 days, 9 days, 72 days, 43 days, anything we wanted. I think a lot of people like to use the conventional numbers. I've sometimes speculated that maybe one could chisel on this a little bit, and instead of using the conventional 21 days, use 19 days and get there a little before the other guys get there. But that may be false reasoning. I'll leave it to you to discuss that later. Let's see what's next. Oh, down at the bottom. That's good. We got volume in blue. We've got another indicator that I can't read. RSI, relative strength indicator. It's gone up, not surprisingly, since the graph up above here goes up pretty steeply. So this goes up, and buyer beware. Maybe this is indicating it's pretty darn strong, and maybe it's going to go on, and maybe it's due for a reversal. Who knows? Next, please. Okay, now 2 simple moving averages, and a little puzzled about the 157 on the right-hand side, the blue bubble. It suggests to me that that's the current value of that. I think maybe this graph is not showing
not all the way to the right.
Not showing some stuff that's off to the right, but be that as it may. Anyway, more about the nature of what controls this. Let's go on to the next slide. Okay, now we're not satisfied with the simple stuff, so we want to go and do something more complex. So we've added all we want to the upper part, but now we've got 2 lowers, I guess. 2 lowers, yeah, it says 2 lowers. Stupid me. Also, this is noting that the high, the recent high, the low in the view of what we can see, what they are. We could draw a line across here anywhere we wanted to. We could set an alert, which might show up on this thing. The MACD has got a little histogram, and it's got a couple of moving averages playing around there. Same thing for the next one. Onward. Okay. We're still not satisfied with charting, so we've gone back and said, well, show us a whole bunch of charts. So we could show 2 charts for the same stock using different time periods. We can show same time period for different stocks, A, B, C, D, E, F chart stocks. There's all sorts of things we can do. At the bottom of these graphs, you can see some little symbols which indicate an earnings statement or an earnings call or option expiration. There's all sorts of things that might be shown there. We could make them the same or different in any of these panels. They're all independently configurable. See the little 3 bars, that indicates there's a menu there. If we pull that down, we'd get a menu that would allow us to play with that section there as opposed to this section here. There's 3 bars up here, which indicates a menu that may deal with the entire tableau. Next slide, please. Okay, clarify. Are you using your pointer because the foreigners out?
Yeah, they can't see what you're pointing
They can't see what I'm pointing at. Okay, well, fine. I'll point, you point. All right, sort of think this is interesting because you can set up a flexible grid and you can make it do all sorts of things. You could have them pointing to the same stocks in all places. You could change the time scale on each of these, as I have done for my own use. I have a very quick one here. I have three windows, I have three windows, this one and this one and this one, but I don't have a middle window, which allows my windows to be a little wider. But I have this one set for a few minutes. I have the left-hand one set for, I don't know, 4 hours per day or something like that. Then I have the top one set to either days or weeks. I can reset that by going to the day tab and choosing a different configuration of days. And if you don't like the different configuration of days and time slots they give you, you can create your own configuration of time slots. Next slide, please. Okay, so here's some chart settings. I keyed in on daily, but I went to daily, and then to the right of that, I went to 3 months by day, but I could go to 3 months by 2 days, I guess, or 3 months by week. How inventive, how creative are you in what you'd like to see? That's what it boils down to. It's all there. Next slide. Okay, where are we now? More chart settings. All right. We're talking about an expansion area in the right-hand column. If you'd like to see where you think this particular holding is going to go, you can set up space to the right, and you can extend your regression line, you can extend your Bollinger Bands or whatnot out to the right and say, well, you know, if it goes below this in a few days, I'd be worried or I'd be happy or whatever. But again, there are just the gazillion pull-down menus. Everywhere you see a down arrow of any sort, you have the chance to pull down and see what it offers you. Across the top is a menu that includes the price axis, the time axis,
Quick time frames.
quick time frames, appearances,
Equities, options, futures.
equities, options, futures,
Forex.
foreign exchange, and so forth. Settings for all of these things for charts. You can quickly amass yourself a group of watch lists, a group of studies, a group of drawings that is beyond my capability to remember. And so someday I've got to get in there and weed out things that I'm not using because they're just taking up space and they're confusing. Next slide, please. Okay, more on charts. There's a quick study, add a study in blue here, and then to the left are all sorts of studies, and on the left-hand column we picked out,
Crossovers.
Crossovers, okay. Crossovers leads to another sub-menu, so there's all these crossovers, and if we're not happy with one of those, we can take it, tailor it to our use, and call it a new thing, and make it our own. Onward. Same thing for drawings. You got all sorts of choices of what you want the mouse to do for you. Ovals, rectangles, arrows, regression channels, Fibonacci, on and on and on. Depends on what you believe in. But this is just an example of drawings. Let's go on to the next one. Okay, gadgets. What do we have in gadgets? Well, the gadgets were the left-hand menu that I showed you quite a while back, and I showed you the watch list. You can see that at the bottom of the listing of 2 columns here. But you can get Trader TV, you can get time and sales, you can get Tetris if you're really bored, you can do a currency map, you have a scratch pad where you can do anything you like, write little notes or whatnot. You can play Minesweeper, another time waster. You can look to get the level 2 quotes on the left, which gets much more detailed on what market is offering what bid and ask with what quantity for sale or for purchase. There's a nice calculator that's convenient from time to time, and one for account information, which sometimes you want to suppress because you want to show a screen to somebody that doesn't have all the account information up and showing. Onward, please. Another listing of gadgets. Gadgets. Too small to read with any convenience, but it's all there. Let's go on. There's the TV news. You like CNBC, CNBC for Europe or Asia, and so forth. But Tasty Trade, okay, Tasty Trade is in there because they're a competing now platform and a competing brokerage house, but they're the people who were behind the development of ThinkOrSwim originally, as I understand it. We're now on slide 32 out of 39, in case anybody cares. Okay, next. Watch lists, public or roll your own, that is to say personal. So here's a list of personal, and I've checked current account positions, or they checked current account positions, but if we went down to public, they've got so many public that they can't put them in one menu. They divide them up by the alphabet. So, you know, there's a lot there, and then there's the top 10 expands into the top 10 movers, the top 10 percentage gainers or losers, the top 10 this and that. You know, you can find anything. Onward. Okay, so here's a chat room, an example of a chat room. There's a trader lounge with 68 people involved with it. There's swim lessons with 300 and some odd. The
Shadow trader.
Shadow trader always seems to have the most people who want to pay attention. And there's somebody named Bazinga in there. You can tell me what that means, but he's the big kahuna in that. And these chat rooms come with text chat where I enter something, then you enter something, and I see what you set up, and you answered what I asked, and I answered what you asked. And this lady here, she nods in and brings up a new subject that she wants to talk about. And he gets involved and says, well, about your subject, ma'am, you know, blah, blah, blah. So that goes on. Meanwhile, there may be a live audio chat going on, or there may be a live video presentation going on where the leader, the presenter, whoever, is saying, well, you know, here's this chart for XYZ stock, and I want you to see this, and that means that such and such is going to happen, or that's what I think will happen. And so there's live video, there's live audio, and there's live text comments available. Let's go back to that for just a second. Let's show up. This is the listen to TOS. There's a refresh. It says that the screen, the video stuff is off the air, I think. And so lots of choices. And then there's ThinkOrSwim lessons. Well, that's the swim lessons, the second one we're focused on. They come on at a particular time of day, and you can be a regular in that, or you can nod in, or you can go to an archived version of this stuff if you need to. I think we'll go on to the next slide. All right. New area of concern. You say, well, there's too many things out there for me to pay attention to. Would you automatically go and scan for all stocks that have a price greater than this and a price later than that, lower than that, for all stocks that have earnings that are positive, or all stocks that have a whole variety of other attributes? And then you go into this area here in the center and you pull the sliders one way or another to expand or contract the area that it's going to look at. In the second row, it's showing in lighter bars the upper end of a distribution, and it says, in effect, I only want to see equities or issues that fall in that upper level, upper end of the distribution. Then, having set all this up, and there probably are some practical limits to how many things you can apply to this scan, but having set it up, you go to the green button on the right and say scan, and the result is down here we show 10 out of 105 or 195, whatever it is, items that it found that meet our set of criteria. And if you do this with options, you can readily end up with hundreds of things that meet your criteria, so it gets tricky. Onward. Here's a little more detail on this. A very narrow band, days to expiration. Well, it only wants apparently 30 minutes or 30 days. No, the minimum is 30 days here in the second row, 30 days to expiration, and it doesn't go much beyond that. It's only a small narrow. It says I want a certain kind of delta in my options. It says I want a certain kind of stock volume underlying this whole thing, and I want a stock beta that can be anything that you can find. So then it does a scan, and it's showing 50. You can decide how many you want it to show at a time. You can sort by some of these columns underneath, like the volume or the bid or the delta on a live screen, and it's showing 50 out of 120 things that it found eligible. Onward. Okay, you're still not content. So we have something called ThinkScript, which may in fact underlie everything we've seen before. And if you like writing computer code as a hardcore nerd, here's where you get to do it. And you can define a plot that you want to have created, and another plot, and an upper area of a plot, and a lower area, and all sorts of other code can be put in here. And there's a whole manual, and there's a whole bunch of people who play with ThinkScript, and they keep themselves busy. Next, please. All right. Now, since we went fast, and you've obviously got some questions that I have not answered, and you have an account with these people, you can go and create a support request. And in doing so, you have to decide what area you're going to point it at, and having chosen that, you can write whatever you want, and then you can create a request here at the bottom, and it will go off. And if you're not doing this at the peak time of day, you might get pretty quick response from somebody who knows how to answer your question or your concern. So, onward to the next one. We've been there. So, we're reasonably on time. We've gone like lickety-split. You've been very kind about not answering, interrupting, or asking too many questions. Is there something you want to go back to? Is there something you want to talk about that's not been covered?
There's a question on here asking how to print charts.
Okay, there is a print function off on the right-hand side.
Is it
It's
here?
probably under that menu. And
I feel like it's one of these two.
it's called print screen. You can print almost any screen, including this one or including the accounts history or the account valuation. There's a whole bunch of things you can print, and in printing you get a choice of sending it to a PDF file or sending it to a piece of paper.
Yeah, it's under the style menu.
Style?
Yeah, if you go under
Okay.
style, there's a print chart.
Okay, thank you.
But yeah, you can pull that down too, and then you can select style.
Okay, that was my learning for today. Thank you.
You can also just do a control print screen on, and then paste it into Word or some other editor.
Yeah.
And if you don't want to get an actual piece of paper.
Right. Well, that just bears out what I said to begin with. There are so many ways to skin a cat that if you can find one to start with and two 5 days later, a second one 5 days later, you may know enough to keep you in hot water the rest of your life. It's up to you how you like to. Who are you as a computer user and as a trader, as an analyst? You just do it the way that suits your capabilities and interests and concerns.
Yeah, I have a question. And I don't know if you're gonna deal with it, but as far as like pricing structure, when you went over the gadgets and the gizmos and all those different things, do they charge a premium for those types of things, or is it all just commission based?
Everything comes for one price. You pay a commission on equity or ETF trades. There are some ETFs that may trade without a fee, but I'm not sure they trade without a commission. And then you pay per leg of the option and per contract. So one leg and one option is one payment.
So it's pretty much commission based.
Yes.
There's no fee to sign up or anything. You can just leave a dormant account open. Their commissions are slightly higher, but they're not awful.
But the commissions depend upon your performance, and they're going to start higher. And if you do a bunch of trading, you can come back and say, please, I'm a good trader, be nice to me, and they'll get nicer as you go along. I've been through a couple of 3 iterations in that place, and I feel I've got it down to the point where it's supportable, but it still generates real money for them.
Sure. All right, thank you.
Yes.
Do they don't have any data, like streaming data fees or anything like that?
Well, everything on here is live. This graph is live during the trading day.
And there's no charge for that?
No, the charge is built in.
It's all part of the commissions.
Yeah.
Are the execution speeds pretty good if you're doing, like say you're trading futures, if you place the market at an order, is it pretty quick?
Okay, don't ask me about futures because
Okay.
I don't
Like
do that.
stocks.
If
Let's
you
say
if you
stocks.
buy a stock, their basic commission starts out at $6 or $7 per 100 shares, I think.
What about speed though? Is it quick?
It's quick.
That's what my question.
If you make a mistake, it's gone.
Okay.
Yeah. Well, and they're very good about that. If you say, I want to confirm this order, it's then going to show you the screen that I showed you earlier and say, okay, you really want to go ahead and do this? This is what you're going to be doing.
Sure.
Is this the account you want to do it with? And on and on and on. And if you say go,
It's gone.
it's gone. If it's a market order, it's gone. And the fortunate thing is for the price of the commission, you can reverse it in another 2 minutes.
Right.
What is the on-demand?
On demand is a segment that allows you to go back and create a trade at a prior date. Now, this is not a live trade that produces profits or losses. It's a paper trade, and you can say, well, if I had done this, if I'd been so smart 2 weeks ago, where would I be today? And that's how you could use that. Now, there is a whole nother function to this at the login screen. You remember the login screen had a bunch of green on it. Well, there was a place where we could have gone and chosen to do paper trading, in which case things would have turned yellow. And the confirmations would have had a yellow thing on them and so forth. And they would have been pushing you to know, this is not live, this is paper, remember it's paper, remember? And you know, it's got locks on it, interlocks that are pretty well designed to keep you from making trouble for yourself. Now, if you'd like to make trouble for yourself, you can go in and you can say, don't keep showing me these extras. If I press go, I mean go. And in that case, one click will get your order into the market and it's gone. You're either going to win or lose.
Is it capable of back testing automated trading systems with custom indicators?
I'm going to let somebody else step forward on that one.
The question is it capable of test back? What was the question?
Back testing.
Back testing and then
Automated trading systems.
and then we know it's weak compared to option view. It has a limited capability.
Yeah, I don't think it's really built for that. You're probably better off with TradeStation or NinjaTrader.
TradeStation or option view.
Yeah.
So many people that use it.
Well,
Anybody that does ThinkScript, I'd like to meet with them because we're on the face.
Yeah. Well, that said, I will point out ThinkScript is there, and probably there are some fairly elegant scripts available to do things. But I haven't had enough time to do all of that stuff.
I jumped into the ThinkScript lounge that you showed earlier, and the downside of that, they only show about 4 hours of their chat, and then it goes away. And such that, but there are some areas stored, these canned scripts that you can go look for. There's tons of them out there.
Yeah.
And there's lots of examples of things. So the gentleman over here.
I've done a lot of work with ThinkScript. I'm not a computer programmer at all, and I've never even opened up the manual. But I would say probably 90% of the studies are not licensed. So if you hit, it says edit source. And then you look at the source, you can copy the source of the code and you can put it into a separate custom indicator. And I've done that with like 4 or 5 standard type indicators that, you know, I kind of like all these, and if all the stars line up, you know, it sends me a message. And it's all just in taking that source code, you know, and just putting it into, taking it from 4 indicators and putting it into one custom indicator. And you don't really have to be.
Yeah, he's saying that for the mic.
It could be somewhat intuitive, but you really don't have to be a programmer. I never looked at the manual.
He's saying you really have chunks of code out of the example indicators they give you, which there are many.
I would say that starting from ground zero, you might read enough of the manual so you know what the definitions of plot and some of these other things are. And there are a couple of tricks there that might be useful to know. But after you examine a few examples, as this gentleman says, you pretty quickly learn how to modify them.
Is there anyone who doesn't know what the role of ThinkOrSwim? In other words, have we given enough context for who should be looking at ThinkOrSwim? And it's people who perhaps are option traders, perhaps are general traders, but who perhaps have an particular interest in the future, at least in options. But you can also trade other instruments. Does anyone have any very basic question about? We don't want to leave anyone behind, I think. Anyone have any basic questions? Who perhaps isn't trading yet?
Well, let me just say, all of this is in the context of an account at TD Ameritrade. It can be, as somebody said a few minutes ago, an unfunded account, but it nevertheless has a proper account number and your name is known to them and your email and some of those things. But you can sit around and play with that and run paper trading for quite a while. They give you a paper trade account with, I don't know, $100,000 in it to start with.
Yeah, so
You can lose it as
goodness
fast
sake,
as you want.
if you haven't got an account, get an account and do it. A demo account is no good because it will time out in a few months. Instead, open a real account, put in your credit information. They'll check your credit rating. I've had an account for, I think, 8 years. It's around maybe 7. It hasn't got 1 cent in it. It never had. And they never ask for the money. Just abort the application process where it says send check now. Just don't do that. And you can have your account free forever, at least until they change their ways. Any other yes?
There's a question in chat asking, can you explain what the warning about Regulation T is all about?
He said question about Regulation T warning.
Yeah.
I'm going to let somebody else field that one.
Well, Regulation T is a standard margining rule of the government. What warning? Is there a specific warning there? Someone?
I'm guessing when they put in their options trade.
Maybe pattern day trader.
What is that person referring to exactly? Does anyone know? What warning?
I think the warning pops up when you day trade an option or trade it this way today. You open it today, you close it tomorrow, or you close it the same day you open it. Then I think they begin to get a little bit antsy.
That's pattern day trader.
Yeah.
But it ties in, yes.
How do we use ThinkOrSwim for fundamental analysis? Yeah.
For what kind of analysis?
Fundamental analysis, FE score.
I'm not getting
Fundamental.
Fundamental. Well,
could you repeat the question, please?
How do we use
ThinkOrSwim? No, we can't.
All right. The question is, how do we do fundamental analysis in ThinkOrSwim? And the answer is, well, what do you mean by fundamental? You can say, well, I want to know about earnings. Well, they're very available to you. You want to know about when when quarterly information calls are coming out from the CEO. You want to listen to one of those broadcasts? You can. If you want to do fundamentals in terms of price earnings ratios, they're probably available to you as one of the studies or drawings in the whole system. And you could set up a chart with that, or you could get it to put out a table for you.
That stuff's probably easier on like finviz.com. Finviz.com is probably an easier resource to get all that at once.
finviz.com. finviz.
Yeah, I mean, fundamental analysis normally is basically done offline. It's not, fundamental analysis is analysis of industries, of macro trends, and so forth. And normally you would do that not on numbers. That's more technical analysis. But certainly you can use a lot of fundamental data too, and they have a certain amount of it.
There's a fundamentals tab under the analyze tab, and you can put in any stock symbol, and it'll give you the EPS and all the basic stuff historically. It's pretty good.
30 days, quarterly, 5 years.
Now, this is a very rich platform. I mean, there's just more than any one person wants, in my opinion.
Let's have a really nice hand for Mike. And let's go on, and we look for more, Michael, in the future, more episodes. With Mark, Ryan, and John. And is the audio okay at this point? Is everything good?
Yeah.
Okay, we're waiting for you want to start the recording.
There's no way to break it up without kicking
Okay,
everybody
fine.
out and restarting.
We can just resume it.
Yeah.
We thought an interactive discussion, the more interactive it is, the better. And so we'd like to get some views on the year that passed and the year that's starting now. We had some fairly sharp cataclysmic events at the beginning of the year, but beyond that, what lessons should we have learned from 2017? What kind of trading environment do we expect for 2018? And what insights can we get from a couple of traders and longtime members and researchers? It doesn't have to be one or the other. And Mark is one of our most active traders, a full-time trader, I believe. Yeah, he's a full-time trader, trading a lot of butterfly and other definitely
at some
other
point.
strategies
We don't
as
want to
well.
forget it. You can put it out of your machine if you want.
We have John, who is going to maybe take a longer point of view, get a little bit away from the total fascination that we all have with option strategies, and maybe get look at it from a bigger picture, an alternative picture, and or something like that. And Ryan has spoken a couple of times, takes a quantitative, in-depth research point of view, and he's also been looking at some overall results in the industry, and maybe we can gain some, some insights by looking at those. Matt, do you have Ryan's?
Yes.
Okay, super. Well, let's start with, let's just get right into it with Ryan. Ryan, looking back over the year, have you looked at some of the results that were achieved or some of the trading systems that are out there and gained any insights?
Yeah, absolutely. So we've studied many different strategies here within our group, and I kind of want to go over some of the results of 2017. And then maybe kind of later on we'll take a look at 2018 as well and where we're headed. So let's go ahead and pull up the first tab there. Well, okay, so this chart we'll go over here in a minute. Let's take a look at I guess it's the last tab you have there. There it is. Okay, so in 2017, so this is all the capital discussions strategies, and we've reviewed a lot of these. So let's go. I want to draw your attention to the road trip trade, which is about halfway down the screen. Okay. So there's two road trip trades that they feature. One is on the SPX. If you scroll a little bit down, we'll see that there's another one that they feature on the ES. There it is, right there. Okay. So right here. So the annual return for 2017 was around 31% for the road trip trade. That's pretty good. And you can see the compound annual growth rate there for the time that they have is around 25%. And thus far this year, in 2018, they have they actually posted a 2% and just over, a little less than 1% there for January and February. And what's really interesting now is that they also post their open trades. So with the market volatility that we've had, we can see how much it's hurt this trade. And down here we have some losses. All right, so these are all their open positions right here, and the return on the max margin is down around 13% for some of these expirations. Now they don't expire until March or April, so they have some time left yet. And so what really hurt these trades is not only the drop in the market price that we experienced a couple weeks ago, but also the increase in volatility. And that's a little bit of what I wanted to go over with you. So if you scroll up just slightly, you're going to see another trade alert called the Vol Vantage Alert Service. I think it's, every time you load this page, they change the order of the stuff. There we go, Vol Vantage. Now, in 2017, this Vol Vantage Alert Service made 100%. return. And so far in 2018, within the first 2 months, it's made another 100%, which is incredible. Now, why is that? Well, that's because it takes advantage of volatility. And so, like I said, with the increasing volatility, some strategies are gonna gain in value, and other strategies are gonna lose in value. Okay. Now, with that being said, I will say that the Vol Advantage trade invested in a particular instrument called the XIV, and that XIV instrument lost 90% of its value overnight, and Credit Suisse is no longer offering the product. So I'm not exactly sure what they're going to do to continue this service. So pretty much in 2017, it was primarily an XIV the majority of the time that it was making money. So we'll see where that goes. But that just gives you an idea of the volatility and where we're headed. So now if you click back on this first chart right here, I'm sorry, the first tab, you see a little bit of what we're talking about. Okay. And if we scroll to the right and look at it on a daily basis instead of, I think it's like a minute basis.
Yeah.
Is that a SPY? I think that.
It's a S&P 500, although
You just scroll all the way to the right. Maybe this is already set up on a daily basis.
it's definitely on a minute basis. Let me.
I think maybe you should re-click on link that because link that should have set it up specifically. Okay. There it is. Yeah. So. All right. Well, then there is a day button somewhere. Anyways, maybe I'll come work with this in a minute. But in any case, so the volatility. So what we're looking at on the screen is this, right? And then these lines here is the S&P 500, and then the red one is the VIX. And gosh, I wish I could see the screen better.
It's got me in view only mode, which is probably the problem. What's that?
Because you're not logged in.
Well.
All right. In any case,
it didn't matter before.
I'll come over here and I'll play with it in a minute. But let's just go on to the other strategies. So if we look at I guess this next one over, one more over. There it is, right there. All right. So here's our friend John Locke. So his strategy did really well in 2017. So there's the M3, which is one that we've studied. It made 104%. Okay, in 2017. There's another one that we studied called the Bull. It made 54% last year. So these are really good returns, and these are all option strategies. And the reason why I think the M3 did so well, and maybe the Rock as well, is because John likes to continuously move his butterfly as the market progresses. And so he kind of takes advantage of the market in that way, as opposed to others, like maybe the Bull, where you kind of just set it up and then you wait for something to trigger. So that's kind of a review of just some of the strategies we studied this year and some of the returns that they returned last year.
What can we make out of some of these strategies? Where, if people here, I think people are not generally familiar with these strategies. Are they central artifacts of the trading environment today? That people should be looking at these particular strategies, or are they just one more strategy? And in other words, we have focused on capital discussions. We have focused strategies, some of these, and are they the right ones that people should look at if they want to trade, or should they just choose anything anywhere?
Sure. So there's many different things you can choose. I think something like the M3 is a little bit more complex and much more difficult. Some of the other strategies, like maybe the Bull or Andrew Cavaldi's Net Zero, is a lot less difficult and more of an entry-level strategy. I downloaded all the data for 2017 and back-tested the Net Zero, Andrew Cavaldi's Net Zero trade, and that made around 70% last year, just as a comparison, which is pretty good. And that one is basically you set up the butterfly, you put it, you basically trade it, and then you take it off based on a trigger. And so I think Mark actually can probably talk more about some of those strategies. He trades it quite a bit.
Okay, let's make sure we cover off what you said here first so that people understand it, and then we'll go to Mark. But how many people here are aware of what we're talking about here, these strategies? How many people are puzzled? I'm puzzled as to what we're talking about.
No, you're talking about butterfly trades.
Okay, so people do, they're not really absolutely unique. They're just sort of packages of ways to trade the butterfly, both the N3 and let's say 60-40-20 or net zero. They're both butterflies now. Some of them are balanced and some of them are more traditional unbalanced butterflies, or you could call them broken wing butterflies. But some of them are better in uptrending markets and others not. Mark, would you like to discuss? Now you've been trading. You've traded M3 in the past. You traded, I know, net zero. What are some of your conclusions or some of your approaches to 2017 for trading your strategies?
Okay, well that's a very open-ended question, but I'll do my best here. I've been trading about 7 or 8 years now, and I've tried a lot of different approaches. Without going on an extensive history, my experience with the butterflies, I started with John Locke's M3, and I bought the package, experimented with it heavily. Felt like there was a lot of discretion involved as to when to make the adjustments, and without being coached by John Locke personally, I found it somewhat difficult to keep up with the adjustments. My trades would run off one end of the butterfly, and I would not make an adjustment in time and run into trouble. And so I guess it's been almost 2 years ago now that we had Andrew Falvey present the net zero 20-40-60 approach, which is it's a very similar butterfly to the M3, but his philosophy is rather than all this adjusting, you just want to close the trade down if you run into trouble and put a new one on. And so it's a direction neutral approach that gives you a range of profitability around where the market is trading right now. You're not really predicting direction either way. And so I was fascinated with this approach, and I did a presentation for the group about a year ago on this, which the videos are on the internet, and if you haven't seen that, I would encourage you. It's been pretty well received, and I've been trading it heavily since about the fall of 2016. And I've done really well with it. Last year, I was just having a great year. By August, I was up 60% in my account for the year. And it does very well in a market that's going sideways. I wish I had been trading during the Obama years, but that's another story. But anyway, so by last August, I was up 60%, and then through the fall, the market just kept running off the upper end of my graph, and so I would put on a trade and be in it a few days, and then all of a sudden, we're up another 50 points or something, and so I ran into a little trouble, taking a few losses last fall. I still finished the year at 45% return on capital for the year, so I feel like I still did okay, but sure would have liked to make that 60%. So,
you're having trouble getting out of butterflies?
Well, no.
Question.
Sometimes you might have to take a loss if it's gotten away from you. The goal is to never take a loss, of course. But yeah, sometimes, I've never had trouble getting out though when I want to get out.
In the middle of the pricing. It seems like you have to take some really tough pricing.
You know, sometimes you can't get a mid-range execution. You know, you may have to pay up a little more. You know, sometimes as much as 25 cents, but usually you can get out. There's a little slippage in any trading, but especially in option trading. There's a little slippage involved. It's just part of the game. So anyway, last fall I kept running off the upper end of my graph, and I was like trying to figure out what to do. Maybe we are in a new, a new market environment where we're not going to chop sideways constantly. Maybe we're just going to keep going up for a good ways. Of course, the market always reverts to the mean ultimately, but it can keep going in one direction for a long time. And so I got to thinking, how can I modify this broken wing butterfly to not get burned on the top side? Because clearly, if you'd just been bullish all last year, you would have done very well. And this is a direction neutral approach, so you know there is a possible way to run into trouble on the upside. And so I did some bull put spreads, and they were working great. And so I went back to look at my butterfly again and started changing the deltas of the leg. So the formula for the basic butterfly is the 20, 40, 60. That's referencing the deltas of the individual strikes. And so what I started doing is pulling the upper leg back from 60 to about 55. Gave me no loss on the upside of the graph. So if the market just took off, at least I wouldn't lose on the top side. And if you stay in it long enough, the time decay builds and you have profitability way to the upside. And so that worked pretty well. And I was not losing any trades anymore. That was working well. And I said, well, let's step it back a little more. Let's have a guaranteed profit on the upside. So I dropped the upper leg to around 52, 50, maybe even 50, some of them. And I was having trades where I had a guaranteed profit on the upside with a big fat profit tent in the middle of the graph and guaranteed profit all the way up, no matter how far it went. And so that's been working very well. That's kind of what I'm doing now. I'm also using bull put spreads, letting the market run up and then selling a bear call spread against it and essentially legging into an iron condor. That's just kind of something I'm experimenting with. But my main focus are these broken wing butterflies. And so if you'll bring your upper leg closer to the center strike, you'll get guaranteed profit on the upside, and that's worked great for me in this market. Now, if we start having some downside or reversion, that's going to not be the case. So my thinking is you kind of have to watch the market, and there's been an effort to design a trade that works in every market, and that's very hard to do. Right now, the bullish call has been the winning trade for a year and a half, except for 2 weeks ago we had a little drama in the market. But aside from that, being bullish has worked. And so if you pull in the upper leg on your butterfly, you will have a delta positive trade. It's no longer a delta neutral trade. But it's still a theta positive trade. So you're making money with capacity time. And anyway, that's what's been working for me.
So let me understand, you haven't been shaken or your belief or optimism about 60, 40, 20 trades still in time?
It is. It's basically a tool in my bag of tricks. And when the market really starts chopping sideways, I will go back to that exclusively. It's a great tool, but you need to have a tool for a choppy sideways market. you need to have a tool for a market that just keeps going up without any reversion. And you need a tool for a bearish market. And so tweaking the strikes on the butterfly can angle the butterfly either way and can give you profitability where you might anticipate it. Now, nobody has really been all that good at predicting the direction of the market, but right now it's been so bullish. You know, you're doing something wrong if you're losing money in a bullish market. So you got to change your strategy.
Very good. We'll come back to this. Let me not leave out John. So, and I know Ryan has some more to elaborate on from what I said before, and we'll come to that. But let me just make sure we get John in here. And John, what is your perspective on all these butterfly trades and also the volatility regime switch and this kind of thing? Is that the right approach, or do you see some other approaches to trading that you would look at?
Yeah, thanks. I think the important thing to think about with all this is, what is your bet? And so if you think about, well, what's my bet? What do I think is going to happen? What tools in my toolkit do I have for that scenario? Mark saw the increasing regime and he saw his losses on his direction neutral trades, right? Fully acknowledged that the 60-40-20 direction neutral, change the strike on that, it's no longer a direction neutral trade. So now you have a bullish trade. You said that, you just have to be cognizant of what your bet is. So at that point in time, you went and said, well, now my bet is that we're in an upward moving market. I no longer think that this market is going to be direction neutral. So with that, you just have to keep that in mind. Are your actions with your trades aligned to what you think is actually going to happen? Or do you have things mismatched because you're confused, or you're unsure, analysis paralysis, that sort of thing? So I would emphasize, always go back to what do I think is going to happen, not, well, what's that mark guy doing? Or I heard this strategy worked really well, let's do that. Have a basis in your reasoning for your trades. As far as the volatility regime goes, I think it's human nature to believe, it can't get any worse than this. It can't get any worse than this. Well, it will, and it does. And I think by the nature of forecasting, you are always wrong. So whether you say, well, volatility can't go any lower, it did. It had like an 8 handle or something, right? When everyone said 9 was it. Oh my God, I can't imagine. Then it prints like 893 or something, right? And so, so you mentioned mean reversion. Somebody mentioned mean reversion. Prices in the markets aren't proven to be mean reverting, but volatility is. Whether that is through the long-term changing of the mean, I don't know. Somebody with a math PhD could probably tell us a little bit more. But so volatility will revert, but you're probably going to be wrong on when it happens. So I wouldn't try to time it that way. I would just be ready to change my expectations. So in a high volatility market, or when VIX is at some certain level, I'm making a certain amount of profit, maybe. So you look at your profits from 2015 or 2014 when VIX was higher, and you compare them to a different time, and they're going to be different. And so don't try and squeeze any more juice out of a lemon that's already been squeezed, I guess. Be realistic. Be realistic about what your bet is, and don't try and kind of gas things up any more than is realistic. And if you don't know what realistic is, ask a friend. They can check you. That's what I would say.
Are you sold, John, on selling volatility. We have a huge number of this whole community, in a sense, the capital discussions community is large, not entirely, because we do have the volatility traders and some others, but a huge percentage of it is focused on selling volatility. And they'll go right on selling volatility, even when it's below normal, even when it's at historic lows. Is this right? Or, I mean, does this, have they proved that it's not, you're not going to lose too much? Or if you do this, or are they, should they be looking elsewhere when you have regimes like we had for a large part of 2017, and we may well go right back into, or at least largely into, in 2018?
No, good question. I think the key, and some of you out there have heard me say it before, heard other people say it maybe, the key that we as retail traders have that other people don't have is that we can diversify into a crazy amount of products at any time without anyone telling us what to do. So if you are only selling volatility, I would urge you that at some point you're going to be in a situation where it doesn't work. So what can you do about that? Well, you can have different other strategies, and you can take your money and you can allocate it however you want to, hopefully balance between those strategies, and then you can reset your expectation on the outcome of those trading returns. Well, John, I'm not going to make as much money. No, you're not going to make as much money, but your down years aren't going to be as bad, and your significant other is not going to be yelling at you as much. And maybe you'll sleep a little better at night, taking the 45% instead of the 60%. Oh no, I only made 45% this year. Yeah, I mean the S&P was up 19, 20% in 2017, something like that, which was a great year, right? You could have barely had a pulse and made money. But I would say diversification is our maybe biggest asset, and to work as hard as you can finding strategies that are not correlated with each other that still have a positive expectancy. Like that's what I try and do, because if you have enough of those and you average them out over time, it turns into a nice, smooth line that goes up and to the right. And I think that's what we all want.
And what are some examples besides, I mean, we have the brokering butterflies, which arguably is selling volatility, and, which is about 80% of the strategies we see on capital discussions and certain other forums. What other areas? I mean, obviously, many of our members are investors and they're long equity, so that, thank goodness, that's one. And but that will also be hurt by an increase in volatility. What are some other instruments or approaches that one could take through trading and investing?
I think a couple of the things that I like, I can't say that I've had success in them because I'm only researching them, but things that I like are kind of rotational strategies where you're long a basket of something, but that something changes. So you might rotate a certain percentage of your money into different ETFs, where those different ETFs are either different sectors, maybe they're commodities, maybe you're in the S&P most of the year because S&P is working well, and the rules of that system say, well, if it's working well, stay in. I think an interesting thing for me as well in the options market that our member Brian Johnson has talked extensively about, written a book about, is options on stocks during and leading up to their earnings events. He wrote a whole book on it. It's really interesting. I think it has a lot of promise. I'm still not trading it, long story, but it has nothing to do with the system itself. So I think that is a way to get purely uncorrelated returns to the underlying itself and the broader market, because you're actually, again, back to what is your bet? Well, your bet for that is that market participants have either overpriced or underpriced the options on the asset before its earnings call. And so where is that in long SPY? It has no correlation at all, right? So if you can find a return source like that, something a little bit more unorthodox, I think that has a lot of promise.
Super. Ryan, you had some various things you may want to follow up on.
Sure. So as far as changing strategy, I think that's a great part. Yeah, I've changed my strategy kind of halfway through the year. Once we started experiencing that upward trending market as well. So basically what I did is I was trading the net zero, excuse me, and realized that a couple of them sort of got away from me. And what I had done was basically trade a little bit less money, obviously, because you're not getting paid as much. Because when volatility is so low, you actually have to put on more contracts in order to gain as much money on a monthly basis. So, what I did do, is I knew that there was a potential for something like this to happen, is I started timing the market, and it's more of a. So I think personally I have a lot of experience with trend following systems, and I can pick bottoms pretty well. I've been doing it for years, and I think it's a lot easier to pick bottoms in markets, especially in bull market, than it is to pick a top. So here's one of the signals that I use, and I would typically get into a trade at the bottom. And the reason being is because volatility spikes. When volatility spikes, then you're actually getting paid more for the options that you're selling. And as a result, when the market starts to go up, volatility actually comes out of the trade, out of the butterfly, which then basically means you get paid quicker. So there was a few times that I did this in 2017 where I made like 10% within like a week or so. And so I basically got in and then got out of the market quicker. And that way I was reducing my exposure or reducing my risk to the market. And then because I was trading less, with the rest of my capital, I just went long. I went long index bonds, I went long tech stocks, and some companies that I believe in, and tech sector did really well. But in any case, here's one of the signals that I traded, and we see this same signal over and over again. We can go back and I'll show you a couple more examples. But basically, markets will trend and then pause, and then trend and then pause. And so they'll trend up, and when I say pause, they're going to trade into like a range. Here in the last half of 2017, there really wasn't any pausing. There was no range at all. Yes, you got a question?
Give us our monthly or whatever time scale. Where does the white line take off?
What we're looking at here is the S&P 500. Okay, this is the daily chart of the S&P 500. The green bars are up days, the red bars are down days, and then the white line is the VIX. All right.
Okay, and where does the chart start?
It starts around
This is November 13th.
So this is
November 2017.
Yeah, November 2017. That's kind of where the trend just kind of took off. You can see it didn't pause at all. You actually
and
scroll back a little bit.
It went to hell in a basket in January.
Yes. Exactly. Okay. Yes, exactly. So in any case, back to the VIX here. So this is the VIX, the volatility index. Okay, it's around. You can see that we had this huge spike in the VIX, right? It went up. And then that occurred when the market crashed. Okay?
It's still working.
And then we had the market went back down again, even lower than it had before. See that? So when the market actually went lower than it did on this spike. But notice that this spike is actually smaller. So there was less fear in the market. The VIX is the fear index. There was less fear in the market, even though the market was going lower. So that tells us that the price of options, basically, that's what the VIX is, the measurement of the price of options, 30-day option, has come down, and that's because there's less of a demand for them. So people are less fearful. And so therefore, you know, a lot of times when we see this divergence between the VIX and the market, it signals a bottom. Okay? Not every time, but it did in this case. Now, what we could see is we could see another drop, you know, from here back down, and we can see the same pattern play out again and come down even further. And my hunch is maybe we'll see a spike lower than these, and that would be another signal. And so we can actually scroll back in time, and we'll see this couple. So here it happened again. Right here, maybe you can just widen the graph out. There we go. There, that's probably a little bit better there. Perfect. So here's another good signal. This happened in August, right, of this past year, where the market dropped, VIX spiked, the market dropped even further, but the VIX didn't spike nearly as much. So another signal that that was a bottom. So what I was doing, I was basically putting on a strategy at that point, and volatility came out of the market quickly and got paid pretty quickly, which was nice because then I was out. So, if you guys have any questions on that? I always like to show people something here because we're just talking about strategies and stuff, and this is something small that you can take.
That's good. So basically, you're advocating, say, an opportunistic strategy is what mixed in when you see the opportunity, you do that, as well as just monthly strategies and the like. Mark, any comments on that?
I was just going to comment about the volatility. I mean, it's been boosted recently, but going back several months back, we were stuck with low vol, and most of these strategies, people are trading the indexes, the S&P 500 or the Russell, or maybe some of the NDX, which have had low volatility for quite a while. If you look, you can see on the chart before this recent spike, it's been pretty choppy to the downside. And so something else that went through my mind a while back, and I've had pretty good luck with it, is trading some of these strategies on some of the big stocks like Amazon, Netflix, trading Boeing, some of these big stocks. The same strategies work, and they seem to have more volatility depending on where they are in their earnings cycle. There's always a spike in volatility right before earnings. But the overall volatility, I mean, it's worked for me to just jump in pretty much any old place on some of these stocks. And I've made quite a bit trading Amazon in the past few months. So anyway, that's something else to think about.
Super. Brian, did some people take some big losses? Looking at these, you looked at a lot of results from the services. Did some of them take some big losses in February?
Yeah, most certainly. I mean, we can still see some of their open positions. If you click back on the page and we scroll through open positions, I mean, the road trip's down. Looks like here 18% on some of their open positions right now. Some people actually, if you scroll back up, posted some big losses. 12% loss in February, 3.5% loss in January. That's for the diagonal calendar spread.
I think, yeah, I think so.
There's a lot of red on the screen. Their open positions are posted recently.
Look at the Jeep through the, well, VolVantage did great, of course.
So is VolVantage long XIV?
The VolVantage is opportunistically will go long vol or short vol, and even sometimes cash. But you need to be on it because I think, a signal might come out, and if you don't get into the signal, if you don't get into the trade that day or get out of the trade that day, you might get burned overnight. So you have to be there, be present. There's a lot of risk, but you can get paid up handsomely.
Yeah, I mean, I think if you look at the Jeep has been doing particularly badly. I'm not sure. Yeah, well, not really. I guess just mediocre.
Well, I don't know, these live positions were opened back in October and November, so I'm not really sure if they've updated, or if that alert service is still even active. I guess it is, because he posted something in January.
Yeah, that guy was, well, and can we look at the next one down that you have there?
And the Rhino.
Oh, yeah, well, this one.
So the Rhino did pretty well. In 2016, the Rhino made 50%, 47%. 2017 only made 11%. I mean, that's going to fail in comparison to the S&P 500, which made 20 on its own. There's a lot of managing of these trades and commission costs, etc. So you always got to think, I mean, is it worth all the hassle? Some people think that it is, and some people are waiting for this year where you're going to make 50%. But yeah, they have a couple open positions. One's down 5%, one's down a little under 2%.
Yeah, I mean, those are all broken line. No, they're both butterfly trades, I believe. And I mean, some of them may have elements of symmetric butterfly as opposed to broken line butterfly. Any questions for any of our panelists or comments?
Yeah, I have a question. As far as the time frame that you're looking at, it seems like you do more of a longer time frame as opposed to an intermediate type trend, or?
Yeah, most of mine I'm putting on around 60 days expiration, approximately, anywhere from 45 to 60. I was just going to comment on this latest market drama that everybody panicked about. I happened to enter new trades the day before all this happened, so there was no time for me to build any profit in the trades before the rug was jerked out from under me, and I was drawn down, but I didn't exit my trades. I stuck with it because I was looking at the VIX chart similar to the way Ryan was saying, and I felt like it would come back, and so at the lowest spot, I was drawn down approximately 2 months profit, but I stuck with my trades, and everything's come back and then some, and doing pretty well.
Other comments or questions for any of our panelists?
Do you guys think the market has fundamentally changed short term?
The question is, has the market fundamentally changed short term? Any takers?
Nobody really knows. You can watch CNBC and everyone has an opinion, and those guys don't know any more than we do, really. I feel like we may be in for some more volatility. There could be some more of these instances where the market drops out, but I'm still pretty bullish on the market. I'm not betting against it. So that's what I'm thinking.
Okay.
If you just want to pull up August of 2015, if you just scroll over there, you'll see a very similar pattern to what we're in right now, where the market dropped and then rallied. Yep, and then rallied. See, and then there was another flush out. So I mean that could happen. What you don't want to see really is you don't want to see the market just kind of taper down slowly, because then it might just fall out completely. So I think as long as we have some action like we're seeing today, then we're probably yes. I think that the market has fundamentally changed from what it was last year. I mean, the vol was incredibly low, and I think that this year is going to see a lot more action, which is good for options traders. It really can be, because there's more opportunities to make money.
Yeah, theoretically, it should be reasonable to trade now. I had suggested not trading for those who were not very skilled when the volatility was so low. It's okay for those who are skilled enough to do so. And now I think it's fine to trade, generally speaking, although some would still say we could be subject to another major fall, certainly as Ryan is pointing out.
I don't have any money in the market, in the options market right now, so I feel a little underqualified to answer the question. But if I asked that to myself, I would say, who are the market participants? What are the inflows, outflows? Why has human behavior changed? Was it human behavior? Was it automated trading? Were there, like, what changed? If the short-term things about the market have changed, then what was it about the real world that changed them? And, like, yes, you can have volatility change all the time. If that was the question, then I would defer to Ryan, right? If the question was there something about our market that changed as a point in time? I don't think so. That's kind of how I would approach it.
Okay, yeah. Very well. Collins?
I just have a question.
Pardon me?
I have a question.
Go ahead.
Okay, how will I determine that a chart is at its bottom, its least bottom?
How do you determine?
Yeah.
What?
The question is for Ryan.
Louder, please.
Question for Ryan, how do you determine we're at a bottom?
So yeah, if I knew that with 100% certainty, then we probably wouldn't all be here learning. So there's that one signal that's probably the one that's most reliable that I've seen. There's obviously a ton of different technical indicators. I've studied a bunch of them. Most of them really don't hold their weight. So I think if you're really interested in learning trends and patterns, an individual by the name of Adam Grimes has a very good course that's free. You can go to his website. It's a bunch of videos, and you can learn about these different patterns and different indicators and stuff. He's a quant that's essentially just gone through all the different material that's out there and said that most of it's baloney, and these are the few things that work. And he's great actually. He has a book too that's pretty inexpensive that you can study along and go through the course with. And I found that very invaluable. So, Adam Grimes.
Mark?
Well, one more thing about recognizing a bottom. There's a whole science behind reading these candles, but if you look at this green candle right here, the market opened at the bottom shoulder of this. During the day, it fell way down here, and the market brought it back up. And then it went as high as there and finished the day here. And so if you think about what's happening, there's a lot of auction theory that's discussed in trading, but if the market drops way down there and gets bid back up to here, that's a bullish candle to me. So you can study up candle reading too, is another idea.
So I've got a question. Is it a reliable signal of a trend change if a market gaps up or down and then closes the gap, or is that not reliable?
Nothing.
In your opinion, is it reliable at all, or is it total garbage?
It's got some short-term validity. I don't know that it's.
The question was if it's a gap. Is that what your question?
If it opens gapped from the close on one direction or the other, and it closes the gap, is that a reliable trend change signal in one direction or another, or is it totally worthless?
I would say if it doesn't close the gap, is a bigger signal.
I mean, I'm asking Ryan and I'm the gap people.
Yeah,
I think you probably need more context than that, but can you give me an example? Can you draw a chart of what you would be talking about? What would it look like? Or can you point out something?
Matt is an expert on gaps.
It's an intraday trade. So you close at a previous day, here, and you open gap here, and then you quickly close the gap. Or you closed here and you open here and you quickly close the gap that direction.
Right. So on most days, that's completely meaningless. 70% of days that's going to happen. It's a more reliable, as far as like a trend changing signal would be like this candlestick up here, where it opens, trends up higher. If it was to gap down like towards or maybe below the prior day's low and then take off the other direction, that would be more of a reliable signal.
Say
That
that again?
see this green candle up here at the top?
Yeah.
We have a nice trend day up at the top. Had we gapped down like below the low and then started working lower from there, that would be a more noticeable signal, a more reliable signal to pay attention to.
Like what he said basically if it gaps down and it continues down.
Right.
Then
like you say you see a strong trend day up and you gap down below that low and start working the other way. That's showing you something's changed in the market. We're seeing repricing. So that's more reliable.
We need to get back into, go ahead.
Did you have a question?
Why are you not talking?
Did you have a question earlier?
The first red one and the second pair of red ones is a real gap.
Have you guys?
That wasn't necessarily this gap right here.
Yeah, but the next pair, that's a real gap, isn't
That's
it?
a general.
Oh, yeah.
From the red to the red.
Yeah. But see this one right here?
And it didn't get filled, and therefore it kept going on down.
Well, it consolidated for a little bit, but like this one we kind of close up, then we gap down, test the prior day low, and reject strongly. That's the stronger, more reliable signal. Right here, we're still just kind of consolidating.
All right, two things. Did the tax code, for corporations and everything change your thinking, being bullish or bearish, and also, I guess, does that signal like are we going to go into a bullish trend? Is that kind of a gut feeling among everyone? Tax codes and things like that. How does that change your view now of the market?
I think we were already in a bullish trend. It was anticipated ahead of time, and it was priced into the market before it even passed.
Before even Congress passed a new tax plan for
or
taxes and that whole bit. Does that give you like a bullish signal like, hey, we're going to play long?
I think you could even argue that was just a signal for the market top, because that's the main thing we're expecting. But, can we produce more? I don't know. We'll have to leave that for another time, I think. Let's have a nice hand for our panelists. Please join us if you can at